Well, good morning, everyone. It's Tuesday, it's September 17th, and the number one question is crude oil. Remember, the other day, there was a major impact to crude oil prices because Iraq allegedly fired off a couple of missiles, drone missiles, into Saudi Arabia's biggest oil reserve. And that really caused a big hamper on oil prices. As you can see here, oil rallied higher above the major resistance level right here. But I wanted to see if it would take out the high and go all the way up to the 65 level. This is the crude oil contract. This is the futures contract. You could see it trading overnight right now. This is the overnight action before the stock market opens. Crude oil's actually opened. The New York futures open a little bit earlier than the stock market does. So it's actually already opened, the futures contract. So the key is right now to see if crude oil takes out the high right around the 63.52 level, or if it continues trading within its range. Right now, based on what I'm seeing, it looks like it's going to trade within the range. And if that's the case, prices will decline and they're not going to be moving parabolically up. I think if we were going to go higher, it would have happened already. Because typically when you have an attack, things happen fast. So that's number one. As far as Fed data, let's talk a little bit about Fed data. Today we have the FOMC meeting. It begins. Expect a subdued market. Typically, the day the meetings begin, we don't see a lot of trading action. Now, tomorrow we have the announcement and we have the forecast and then the Fed chair press conference. That's going to cause volatility. More likely than not, the Fed is going to lower interest rates. More likely than not. Now, let's look at the bond market real quick. The bond market, this is the Treasury, this is the T-bond. This is actually a 30-year T-bond. It's trading right below the 50-day line, and it went to oversold territory right here on the RSI, and it looks like it's about to bounce back. I believe we're going to see subdued trading action from the stock market in the next few weeks because I don't see the momentum really gaining strength, especially on small caps, and that's going to cause the bond market to rally. So I believe we're going to be going a little bullish on the bond market over the next few sessions. Now, let's look at the small caps. Notice here, RSI is already overbought. We're nowhere near the all-time highs. Let me extend the time period a little bit here for you. We have to go quite a bit higher. We made all-time highs in this contract last summer. All right. Remember what I always tell you, speculative stocks tend to go higher and lower, all right, before the broad market because they're more speculative. Now, this contract, the Russell 2000 small caps, peaked all the way in August of 2018. The S&P 500, if you look here, didn't peak till almost a year later, which means small caps should start picking up before. Because look, they made all-time highs. They started coming down almost a year before large caps did. So there's a lot more speculation. There's a lot more foreseeability in terms of action. Because blue chips are the last ones to be bought and the last ones to be sold. Nobody likes to liquidate and buy blue chips. They like to speculate on smaller caps, and then the action moves into blue chips. So as we're seeing right here, not seeing anything major. We rallied a few days, took the broad market a little higher, and now it looks like with the RSI overbought again, it looks like we're going to come down, and that's going to drag the S&P 500, which is what we're looking at right now, back down to the 50-day line. So expect weakness in crude oil, expect slight weakness from the stock market because everything is already priced in. You guys are hearing this little cat here. He's the troublemaker right now. This is a miniature Persian, and this is Bonnie. I love this cat, but this is what's making the sound behind me. Anyways, don't expect too much from the stock market next few days. Expect defensive stocks like utilities, for example, to continue rallying. Don't expect too much from blue chips, and keep your eye out on the small caps. The ticker symbol for small caps is IWM. That's the Russell 2000, IWM. And that's telling us the broad direction of the stock market. Look at it like this. Imagine you have an athlete, and the athlete has a big 50-pound weight on their shoulders. That's what the stock market feels like right now, with the Russell barely trading above the 50-day line. So till the Russell really starts moving higher, and that won't happen until we have some resolution with trade war, we're more than likely going to see more congestion and sideways trading action and very limited upside on the overall stock market. Again, tomorrow's going to be key. Today, the markets are going to be subdued. They're going to be a little dampened due to Fed. But tomorrow, we're going to see an announcement before the close. Keep your eye on the market, especially second half of the day. I'll talk to you guys tomorrow. Have a great day. Oh, and if you guys are liking these videos, please subscribe to this channel. Send me an email, support@marketgeeks.com, or like us, or do all of the above. Talk soon.